Hey, family. I am Taylor Andre of Tailor Made Real Estate Easy, and I am ecstatic. I'm really happy to be here tonight um, on this amazing September 26th, Thursday night, talking about my favorite loan product in the whole wide world, an FHA 203K, building your dream home. And so, with this loan, first, and for those who don't know, my name is Taylor Andre. Taylor Made Real Estate Easy, and I have been a real estate agent for 8+ years. And throughout this journey, I have seen it all in regards to real estate. I have written a book called Finally Home, the step by step guide for people preparing for first time homeownership, because I was spending so much of my time educating people on the simple things of like financial literacy, credit, budgeting, savings, different loan products, process of purchasing a home. And so I thought it was really important for people to understand the baseline of financial literacy and to build up our knowledge into homeownership equaling generational wealth, if that's what people chose to do. And so today, we're going to talk about one of my favorite loans, which is a 203K. I'm here to answer any and all of the questions that you may have. Drop them in the chat, and I will go ahead and get right to it. And so, some of the questions that people have had throughout the years are some of the questions that we'll be discussing this evening. And if your question is not answered in these uh, pre-written questions, then we can definitely get into yours as well. So what is a 203K? It's a form of financing, and it's a form of financing that is backed by the FHA. What does that mean? So if you are looking for a loan and you're like either doing conventional or FHA, FHA is federally backed. The government backs it. The government says, you know what? I believe and trust in this borrower. And if this person doesn't pay you, I got it. I'll pay you. And so it's basically, I can't believe I'm saying this. It's like the Section 8 of homeownership, but it's really not. I say that in the sense of you can, you people can, or banks will feel confident that they're going to get their money. If this person forecloses because they lose their job, they don't pay their mortgage, they fail to pay their bills for whatever reason, they are going to get their money because the government is backing it. The government is putting some behind you, and so you have a little muscle. Conventional, the government is not behind you. And because the government is not behind you, you're more likely to be able to put more money down, and you don't have to pay PMI, which is private mortgage insurance. PMI with FHA stays with you. And the reason why it stays with you is because there's a possibility that you may default. That default means you may not pay your bills. Why won't you pay your bills? Maybe they don't feel like you'll be able to pay your bills because of your income. Maybe you won't be able to pay your bills because of the way your credit looks. Maybe you won't pay your bills because of how your checkings and savings is set up. And so when you go for a pre-approval, you're going to have the conversation with either a loan officer, a banker, or if you're working with me, we're working with a loan officer, or if you have a private or program or a grant that you're working with, those typically only go through banks. But for the most part, banks are very impersonable. You're not going to have a real relationship. Your lender is not going to send you an email saying, hey, just wanted to remind you it was your birthday. Even though it's just an automated system, it's less Like it's more corporation and less person to person. So an FHA 203K, a 203K is a construction loan. Long story short, it's a construction loan. And with that construction loan, you are constructing the home in one way or another. Whether you are solely as simple as the railing is wobbly and I want to fix the railing. Typically, if you were using a FHA loan, peeling paint, railings, steps, stairs, anything involving safety, you would not be able to move forward with the closing of that home. Why? Because these are safety issues. If the railing is wobbly and somebody falls down the stairs and the railing can't even help and protect you, you're going to be sued. And the bank, aka the government, or banks and government, is not in the business of losing money. And so if this home does not meet the standards of safety and health, of course, then it's not a yes for us. But if you use, and you've probably seen this plenty of times, whether you're on whatever site, MLS, Zillow, Realtor, any of them, and they're saying, may not qualify for FHA, may not qualify for VA. The reason why they're saying that is because of the stringent rules that FHA and VA has regarding health and safety. But you can bypass that by saying, I want to renovate. I want to use this construction loan. And even if it's as simple as fixing the railing, or as complicated as doing the entire roof over, or taking it a step further and say, I want to do the roof, the kitchen, and the bathroom. You definitely have that option now. And so that is the underlying. That's Taylor's version. The technical answer is an FHA 203K loan is a type of government-backed mortgage designed to help borrowers finance both the purchase of a home and the cost of the renovations or repairs. It combines home purchase price with the renovation costs into one single loan, making it ideal for buyers looking to purchase fixer-uppers or homes that need significant or insignificant repairs. And so there's two different types of 203K loans. I'll give you the definition first, and then I'll give you the Taylorism, because clearly I have my own language. So the real definition is the standard FHA loan only covers the cost of purchasing a home, while FHA 203K loan allows you to finance both the home purchase and the necessary repairs and or renovations. With an FHA 203K, you can borrow money to make structural repairs, updates, and even major renovations that would not be covered in a standard FHA. Who qualifies for an FHA? So to qualify for an FHA 203K loan, you have to meet the following criteria. First, your credit score. Most lenders require a minimum credit score of 580. If Taylor Andre is your real estate agent, you best be coming to the table with nothing less than a 680. And if we've had time together to plan this out properly, you'll be at the table with a 750. Because I'm not in the business of having you pay no points over what you need to pay. If we can raise your credit score, let's do that. There's no reason why you should be paying more when you could be raising your score. That need to be put in a song. Down payment. To finish that, credit score. Most lenders require a minimum credit score of 580. Taylor requires 680, though some may accept lower scores with a higher down payment. Down payment. you must make down payment of at least 3.5% of the total loan amount. This includes the purchase price and the renovation loan. Your purchase price and renovation loan will not exceed what you're pre-approved for. So let's say, for instance, you're pre-approved for $800,000. What is 3.5% of 800? $28,000. So you're bringing $28,000 to the table for your down payment. And that 3.5%, let's go ahead and change that to a 2%. You should also have an additional $16,000 for closing costs. Just so you know, closing costs is completely different from your down payment. There is a formula that is typically anywhere between 3 and 6% of the total loan. That is typically, if you have a conventional and FHA, it might be a little lower. And so it's usually like between 2 and 5% of the total loan. Why? Why do you need all that money in order to have closing costs? And so the reason why, it's underwriting, right? People who worked on your loan need to get paid. So there are different aspects that need to be covered. I want to pause here because I want to give real life examples. And if you allow me, I would love to pull up what is called a CD. And a CD is a closing disclosure. And a closing disclosure is an itemized receipt that goes through everything that you are paying for. And so this is not something that I will share on screen, but these are numbers that we will go through together. Oh yeah, I just refiled everything. Damn it. I believe I should have a closing disclosure. Aquí. No. I just refiled my whole file cabinet. Lord have mercy. So what I will do is I will closing costs. It's also known as an ALTA. And I'm going to pull up a ALTA statement here, and then we can screen share. So I'm a visual learner. You could give me like step by step the whole way. If I can't see it, I don't really understand. And so your lender fees, what it takes for everyone behind the scenes to get paid as these loan documents were put in, checking your credit, making sure that you have money in the bank, and how many banks do you have, and hidden money that maybe you didn't disclose, and you was working with a credit repair company and they was hiding this and hiding that. Everything comes out in the rinse and everything comes out in the wash. There is nothing that you're going to do during this purchase that's going to be hidden from the United States government, baby. It does not work like that. It's like trying to hide from the IRS, man. They gonna find it, then they're going to ask you about it, and then you have to perform, aka you have to write a letter, you have to disclose, you have to explain XYZ. The title insurance premiums. What is it? Title insurance. You know what your car title is, right? And so having title insurance is like this house. This house has had 6 different lenders at one time. This house has had 4 different owners throughout the course of this house being here. A title is basically itemized understanding of the transfer of this home without the finances behind it. So a title has nothing to do with money. Title has to do with transferring of ownership. And whether that transfer of ownership is you, the buyer, you, the owner, or you, the lender. It could have been Bank of America. And then after Bank of America had it, Wachovia had it. And then after Wachovia had it, some little Yobo loan officer or bank had it. But Yobo is now out of commission. They no longer exist. And so now we have to do this homework about like, did Yobo pay who they needed to pay so this title is clear? And a free and clear title is not an easy feat, especially for older homes that have been through life. Appraisal costs, having to send somebody out to take photos of the home, to determine the value of the home, inspection fees, attorney fees, recording fees, transfer of taxes, home association fees. And it may even have sometimes, if you look at a listing and it says buyer is responsible for utilities, that means they could be a water bill that is $16,000 that you're responsible for. It could mean that there's an electric, well, typically when the owner is responsible for utilities, it's typically water, because your electric follows your social, whereas water follows the home. And so all of that is on an altar, and I'm going to pull up an altar so you guys can see one. And that's tiny. You guys aren't going to be able to see that. Where's my Brian? Brian, I need help. We will pull this up at a later date. I'll put a link in the chat. Take a picture so you guys can see what an altar looks like. Oh, this may be a really good one as far as like being able to see. And so I'm going to increase this for all of those who need to see things like I do. So this is a closing disclosure. This is not the real deal. This is just an example. And I'm going to make this a little bigger so you guys can see. We'll run through it. All right. So at the top, you'll see this is a CD, also known as an ALTA. You'll have the date that it was issued, the closing date, the disbursement date, the settlement agent, or typically the title company, or your attorney. It really just depends. The sales price, the property address, the borrower, the seller, the lender, the loan terms, the purpose, the product, and the loan type. You see here it says conventional, FHA, VA. And so if you do a 203K, it's still going to say an FHA, even though it's a FHA 203K. So your loan amount, your interest rate, the monthly principal and interest is here. And then it gives you a breakdown of the principal and interest, the mortgage insurance, the estimated escrow, your total monthly payments, the estimate of taxes, insurance, and assessments. Sometimes those assessments are in the form of homeowners insurance. As you can see here, it's not here, but if it was, this would be checked yes, and that assessment would be of the homeowners and the homeowners association. The closing cost, right? Let's come back up here. The purchase price was $162,000. They put down their interest rate was 3.8. The closing cost is $9,712.10. This includes $4,694.05 in loan costs plus $5,000 in other costs. Cash to close is $14,000. This includes the closing cost. Coming down here, this is the itemized. Let's make this a little bigger so you can see clearly now that the rain is gone. Page 2. So the loan cost, we're looking at a fourth of a point, 0.25 of a loan amount. These are points. $405. Application fee, $300. Underwriting fee, $1,900. That total comes up to $1,802. Your appraisal fee, um, was 400. What is it? $405. Can we get rid of this? Yes. There we go. $405. And if you look up here, this was paid by others, right? So this is what the borrower paid. This is what the seller pays. This is an itemized list. Your closing disclosure or your ALTA is an itemized list of what it looks like when you close and where all the money went penny for penny. Come down here a little bit more. Flood determination fee, whether or not flood was necessary. Flood monitoring fee, tax monitoring fee, tax status research fee. So one of the things that I've learned as a real estate agent is there are fees. If you take a look at your disclosure, because you will get a draft disclosure prior to your closing. You should get it about 72 hours, sometimes 24 hours before you close. And you can request some of these fees to be lifted. Just like if you pick up the phone first thing tomorrow and call your credit card company, you can also ask for late fees to be removed, for interest to be removed. And in my experience, not everybody does this, but you can have up to 3 lates, because you can be late on a bill, but not be late on your credit. And so you can ask them to take those late fees off and they will credit your account whatever you already paid. This is something that you can do only every 18 months. I digressed because we're talking about an ALTA right now and we should be talking about a 203K, but I want you to fully understand everything. Coming down here, services borrowers did shop for, which means that you had total control over the price that you paid. And so this is the pest inspection. This is the survey fee. And everybody's ALTA is going to be different because there's so many variables based on the city, based on the town, based on the needs of the home. Like this one covers flood. You may not even live in a flood zone, so that won't even be on your ALTA. Title insurance for the insurance binder, the lender's title insurance, the settlement agent fee, the title search, like all of these things added up together. $4,664 other costs. So you have the recording fee of $85. These are things that the seller paid. Home insurance premium for 12 months, prepaid interest, property tax, homeowners insurance, mortgage insurance, property taxes, in the HOA information, and then all the way at the bottom, you will see the calculations, the total closing cost, the estimate versus the final, the down payment from the borrower, the deposits, and again, you'll see it on from the borrower side here and the seller side over here. So you'll see here at the bottom. So $189,000 paid already on behalf of the borrower is $175,000. This is like what the bank gave, and then this is the cash to close. The difference between what the house cost with all fees included minus what the bank has paid for this house, and now you are paying the bank back. This is what's left over. This is what you're bringing to closing. Total due at the seller. The seller was due $180,000. The total due from seller at closing is $100 minus $115,000. They probably owed $115,000 on the house. They walk away with $64,000. And so that's just to give you a better understanding of what it looks like to have an ALTA, to have this statement of purchasing a home. And I forgive me for digressing, but we went down a rabbit hole and I didn't want to leave you hanging and wanted to make sure that you fully understood the words that were coming out of my mouth with actual visuals to put together. And so what type down payment. That's where we went down the rabbit hole. The difference between down payment and closing costs, and why and how they differed. And I think the CD helped us better understand that. Occupancy. The property must be your primary residence. You cannot use an FHA 203K loan to finance an investment property. This has to be the home that you live in. Debt to income ratio, your total debt, including the mortgage, should generally not exceed 43% of your gross monthly income. Depending on the loan, depending on the product, depending on the bank, there's variables. Sometimes you can go up to 51%. I have seen 51%. There is other factors that come along with that. You're paying more money. There's extra points over here. The things that's not discussed over there. But depending on your debt to income ratio, you may be paying a little bit more than someone else who has a lower debt to income ratio. What types of properties are eligible for FHA 203K financing? And so a single family, a multifamily up to 4 units, condominiums, if the condo association allows for renovations, because this is a renovation loan, mixed use properties, as long as the residential portion accounts for the majority. So when you purchase a mixed use, New Bedford and Fall River, Springfield and Worcester are huge for this. Even some parts of Brockton, for you to be able to get a mixed use property. And so it has 4 units. One of them is like a barber shop on the first floor, and then 3 residentials upstairs. As long as the 3 residentials exceed 50% of the total, let me break this down. Let's just say, for example, it's 4,000 square feet. The first floor is 1,000 square feet. The 3 units are 3,000 square feet. Because the 3 residential units exceed more than 50% of the square footage, you can use it. Now, if you find, for example, I have seen this where it was a mixed use property and the first floor was a grocery store at one time. It was like 2,000 square feet. And that 2,000 square feet, it exceeds the 3,989 square feet. And so this 2,000 on the first floor, even though it is 2 square footages, larger than the residential, it will not apply. It has to be greater 50% residential than the commercial. And so if you're interested in purchasing a mixed use property, you could absolutely get you a commercial with a residential using an FHA and using an FHA 203K. Mixed use property, as long as the residential portion accounts for the majority, the property must be at least 1 year old to qualify for the FHA 203K loan. And I hope so, because what are we doing why do we need a 203K for something that was just built last year? What renovations or repairs can be financed with an FHA loan? So you can do structural repairs, foundation, roof, the masonry work, a part of the basement, room addition. So let's say, for instance, it has 4,000 square feet. It has 2 parlors. It has a living room and a parlor. You want to turn that living room into a bedroom. Let's do it. Kitchen and bathroom remodels, energy efficient improvements, windows, HVACs, mini splits, insulations, accessibility modifications. So if you need something that's going to help with wheelchair accessibility, with any ADA, right? Electrical, plumbing repairs, luxury items like pools, outdoor kitchens, or hot tubs are typically not covered. But if you're ADA and you need that jacuzzi for health purposes, there's always exceptions to the rule. Listen, I'm going to always find the loophole, baby. Call me Donald Trump because there's a loophole everywhere. What is the difference between a standard and a limited FHA 203K loan? So a standard it's 7 o'clock already. We've been here for 30 minutes. Wow, this has been so fast. Okay, so a standard FHA 203K, the funds are not dispersed as a lump sum. The lender will provide a portion of the loan to the seller to cover the home's purchase. So, long story short, it's in cycles. And this is to protect you, the buyer. And so there have been so many stories with people that are saying, like, I hired a contractor, they took the money, they ran off. The government is not letting the plug go nowhere. And so, listen, you need a contractor that's going to come to the table with their own funds. And as soon as, okay, we're going to fix the roof. All right, we fixed the roof. Here goes the invoice. Then they get paid. All right, we're going to do the bathroom. We're going to do the kitchen. Here's the invoice. Then they get paid. And so there's disbursements to make sure that you, the buyer, you, the consumer, are protected from people who may not always, be on the up and up. Is that to say every contractor is going to run off on you? Absolutely not. And with a 203K, they won't be allowed to because of the way that the loan is structured. And so that's one of the reasons why some contractors don't like working with FHA 203Ks, because they're held accountable for every step of the way. But the truth of the matter is that's how business should be done anyways. Can I choose my own contractor for the renovation? Absolutely, yes, you can. And there's also a list of approved contractors that have went through the system, have done their paperwork, and have proven to be able to handle 203Ks. But if you are looking to work with your own contractor, there is some onboarding that needs to be done. In my experience, contractors want this, because it allows them to have like it's another badge under their name. Like, yeah, I'm 203K certified. The government trusts me. And if the government trusts me, so should you. So in my experience, there's more good apples than there are bad apples. And for the most part, God has blessed me to meet some of the most amazing contractors that get the work done, do it to perfection, and get their check at the end of the day. There is some onboarding. One of the things that I have noticed is that I use the example of Tesla. Tesla was a genius. And many of the things that we see today, as far as energy is concerned, is due to the work that Tesla put in. A lot of us only know Tesla's name because of Elon Musk and driving a Tesla. The reason why we understand Bell, the baby bells, this is how much that I have little respect for him. And the reason why I have little respect for him is because he stole everything from Tesla. He had the ability to juggle it, right? He knew how to do the work and manage the paperwork and the people, where Tesla was laser focused on the work itself. Thomas Edison, because it was Edison, and then it went to the bells, and then it went to the baby bells, and now we have all of the multiple phone companies that we have. And that's how old I am. And so Thomas Edison, it really gets the credit for a lot of the electricity and energy, because he was able to manage his work, his his papers, and the people, where Tesla was so laser focused on the work itself that he wasn't good at multitasking, and kind of lost credibility and all of his work to somebody who was able. The truth of the matter is he was able to do it. And so one of the things I've seen is a lot of contractors are very much like Tesla, where they're laser focused on doing the work and need a little help with the paperwork. And so if you, as a buyer, are willing to just help your contract, if you know your contractor is a beast and might be writing things down on scratch paper or a napkin, if you can help your contractor in that sense, perfect. If not, this is something that you do may need to be on top of your contractor and or bring in a project manager to help your contractor. And I say that because you're going to have different phases, especially if you're doing a fixer-upper. Every other house on the street is absolutely immaculate. This house is in the dump, but you're going to walk in with $300,000 equity. It's going to be worth it for you to put in the time. There is nothing on this planet that comes easy, that is simple, unless you put the work in. And a 203K falls in that same vein. Yes, it's work. It's not simple. You're going to cry. You're going to have a headache. You're going to want to quit. But at the end of the day, when you're sitting in your house and your kitchen is renovated, when your foundation is crispy, when everything in your house is exactly how you wanted it because you was able to build your dream home, cry them tears. Can you choose your own contractor? Absolutely. How long do I have to complete the renovations? Typically you have 6 months from the date of closing. You cannot find the house and start work tomorrow. When you close, and literally I had a client that did a 203K. We closed at 10 a.m. He was on the property at 12 p.m. His general contractor was there. His property manager was there. He had the electrician there. They were demoing by 6 p.m. Like, he was on it. It didn't take him 6 months. And so you typically have 6 months from the day that you close to complete the renovations under the FHA 203K loan. During this period, the lender will inspect the work at various stages to ensure the project is progressing on schedule and the funds are being used appropriately. Again, it is a headache. It is going to be tedious, but it is worth it because it is there. These things are put in place to be able to protect you. What are the interest rates and fees associated with an FHA 203K? So interest rates for FHA 203K are typically slightly higher than regular FHA loans due to the added complexity in the financing renovations. And rates may range anywhere from 1/4 of a point, which is 0.25, up to 3/4 of a point, which is 0.75. And so the higher, which are higher than traditional FHA loans, in addition to interest, there may be other fees. Just wait, because we're going to talk about this in a minute. There may be other fees, such as mortgage insurance premium, which is an upfront fee of 1.75% of the total loan, plus the annual fee of 0.45 to 1.5. Closing costs similar to other loans. Expect to pay the closing costs, including the origination fees, the appraisal fees, the inspection fees, the attorney fees, and everything that we discussed on the CD, aka the ALTA. And so some of the changes, there are changes. And I'm really excited about these changes because it allows us to have more and it allows you to do more. And so typically right now, the FHA 203K loan is a 203K loan limited. This is the one where you do not need anyone to come out. You're doing something small. You're doing the kitchen. You're doing the bathroom. You're doing like 1 or 2 things, and it's going to be under $75,000. This is as of November 4th. If you purchase with a 203K after November 4th or close using a 203K after November 4th, you have up to $75,000 where you do not need a 203K specialist to come out and babysit you, which is a fee that you no longer have to pay. You also have 9 months to finish the project, where right now the limited only allows you 6 months. You have 15 days that the property does not have, you don't have to live in the property for 15 days. So you have 15 days to start the project, where it's going to take we can't live here during these 15 days. And this is like the smaller version. So you're doing the kitchen. So for 2 weeks, you won't be able to use your kitchen. You don't have to live there. After those 15 days, the kitchen should be done. You can move in. There's this part 2 if you're like, but Taylor, the kitchen's going to take me longer based on, wait a second, I got you. Consulting fees can be financed, which means, so right now, I had a client, all my clients right now had to pay the consultant. So while we're in contract and we're waiting to close, the consultant's going to come out. We're going to take a look at the roof. We're going to take a look at the kitchen. You want to do this, you want to do that. Taking notes the whole time, goes into the system, and you get a notification like, hey, based on what I saw here today, the roof should cost you $17,000. This is going to cost you blah, 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 blah. And my fee for coming out and giving you this itemized list is, and that typically can be anywhere from a $900 check that comes directly out of your pocket to a $2,000 check that comes directly out of your pocket. With the updated version of a 203K as of November 4th, you will be able to finance those fees. And so it's not coming out of your pocket, but it's going into your loan, and you'll be able to pay it as part of your mortgage. Again, this is effective November 4th. A FHA 203K loan, the standard. And so this is if you're doing like, you're going to gut the whole house, the whole team. I want a new everything. So the repairs and renovation can go up to the maximum approved limit. So if you're approved for $650,000, you can use all $650,000 to renovate. This is the 203K standard. The limited is limited. You're limited, and it's capped at $75,000. Right now, today, it's capped at $35,000. Once November 4th comes, it's capped at $75,000. You guys, this excites me. This is my favorite loan on earth because you literally can build your dream home. Effective November 4th, 12 months to complete the rehab. Right now, it's 6 months. Effective November 4th, 12 payments of mortgage payments to be financed. Let me tell you this. Right now, it's 6 months. We found a house. It's the ugliest house on the street and needs so much work. We're buying it for $100. You have $1,000 that you can play with in order to renovate this home. So after that $100, you have $900 to make this house everything you want it to be. You have the whole $900 that you can use. You have 12 months to complete your project. And in those 12 months, you don't pay not one mortgage payment. This is called a 203K. And it is the most amazing thing on earth. On top of that, you can also finance the consulting fees. You're literally buying a brand new house and renovating it for the cost of your down payment and your closing cost. Let me come over here because I don't know if anybody has questions. What are the loan limits for a 203K loan, and what are the limits, and are the limits different for different states? So when they say the loan limits, they're saying like your loan limit. So if your loan limit is $650,000, you have up to $650,000. If your loan limit in Mississippi is $150,000, your loan limit is $150,000. So if you buy, and the thing about a 203K is that you can buy a foundation. Like it could literally have nothing there but a foundation. It does have to have a structure. You cannot just purchase land and have raw land and build. That's the only thing that sucks about a 203K, is that you can't purchase raw land and build from the ground up. There has to have had been a structure there at one time. But let's say, for instance, and no disrespect to my ancestors, but let's say, for instance, we're in Alabama and we're in the backwoods, and granddad has some land, and that land has been abandoned, but there's a old slave shack. Remember them 300 square foot, the kitchen, the living room, the bedroom was all within that studio? That's still a foundation, and that's still enough for you to go ahead and say, all right, it's now my front porch, and I'm building the rest of my house. Technically, you could 203K that motherfucker to whatever the hell you want it to be. And so I can't tell you how much I love this loan product. There's so many unlimited possibilities for you. And so the loan limits different per state. It's really like, it's different per everybody. It's different. Like what I'm pre-approved for may not be what you're pre-approved for. And the greatest thing about this too is you could always refinance into a conventional and possibly go do another one and another one and another one. So it's just, there's so many options. There's so many opportunities. It's really on you and what it is that you want to do and how you want to make this work. If you're in Massachusetts, if you're in Rhode Island, if you're in Georgia, those are states that I'm licensed in. I have sisters, I have brothers in all other states. I have international agents that I work with. So however I can, I will be helpful to you. As far as the 203K, this is here in America. And let me tell you the best thing about it. Where's my Puerto Ricans at? Because my Puerto Ricans can do a 203K in Puerto Rico. In Puerto Rico. Go get you a 4-family in Puerto Rico. Use a 203K, renovate it. You live there and you got 3 Airbnbs for people who want to come and visit. I'm far from a gatekeeper, baby. That was I was going back and forth to Puerto Rico trying to figure out how to do it. Now that I know, hey, how you doing? Let's go to Puerto Rico and build you up. So if there's not any other additional questions, it's currently 7:17. I think we went through everything. I went through all of the top 10 questions regarding an FHA 203K. And one of the things I did want to do is to show you, present this to you so you can see it. If you're anything like me and you have to see it with your eyes, I want you to be able to see it with your eyes. Is that big enough for you? I can make it a little bigger. Hold on. So this is again, remember, effective November 4th. The limited, you're limited up to 75,000. Currently, you're limited up to 35,000. After November 4th, you're limited for to complete your rehab. You have 9 months, and that moves up from 6 months. That's the current requirements. Will allow the property to be uninhibited. You do not have to live there for 30 days while you do the renovations. Right now, it's 14 days. Your consultant fees can be financed. Currently, this is not allowed. It can be financed into a limited as well as the standard. The standard, again, November 4th is the day that all of these changes are made. The 12 months to complete the rehab. Previously it is 6 months, or currently it's 6 months. Soon, November 4th, it'll be 12 months. And those 12 months of monthly mortgage payments will be financed, rolled into the loan. Right now it's at 6 months. You do not have to make a mortgage payment for 6 months while you do this renovation. Any questions? How do you get a 203K? I put you in contact with one of my loan officers. They go ahead and get you pre-approved. Whatever your pre-approval amount is what you got to play with. Period. It's that easy. A regular pre-approval can be used. Now, if you have a lender and you don't want to work with my lender, that's perfectly fine. Ask your lender about a 203k loan. It's a renovation loan. Ask them if they've done one before. You want a loan officer that has completed a 203k, because I unfortunately have had someone who has never completed a 203k, and it was the most difficult thing to work with because you have somebody who's learning on the job. And you don't want a surgeon in your body that has never done surgery before by themselves. And so if this is their first 203k, ask them if they mind working with somebody who can help them, coach them, guide them through it to help ease the process for you. And working with a contractor that has been through the process before is advantageous to you. But if your contractor has never been through the process, then let's bring somebody in. I can help. The biggest part of a 203k is the paperwork, is the behind the scenes, is making the numbers make sense. And sometimes it can be daunting, and sometimes you want to quit, and sometimes you want to give up, and sometimes you want to cry, and sometimes you're going to want to fight. I'm going to be 1,000% with you. This is not easy peasy. It can be if we all communicate and if we all stay on the same page and we all understand that Murphy's Law, Newton's Law, anything that can happen will happen, and most likely is going to happen. And as long as we can breathe and woosah, everything will be fine. And you'll be in your beautiful house that you fully renovated, and I'll be at the housewarming. You got everything. You got pain and beauty. There's pain and beauty in everything. And whether that's, getting your eyebrows done, or whether that's having to, have a little bit of pain to have a long-term gain, is life. And so I'm excited. I'm ready. If you're ready, let's do it. Let's figure it out. Whether you need an agent that's not in a state that I'm in, I can help. You need a loan officer, I can help. You need an attorney, I can help. You need a pre-approval, I can help. You know somebody that's looking to sell, I can help. You know somebody who wants to buy, I can help. www.taylorandre.com. I'll put you in contact with my executive assistant. We'll get some time on the calendar and figure this out. I thank you. I love you. I appreciate you. Taylor Andre, Taylor made real estate easy.